Good morning traders, it's me Ali and I warmly welcome all of you in another forecast video of the precious metal gold and the USD Canadian dollar. Guys, the reason I am discussing about Canadian dollar today is because I believe there is a trade setup and I would like to share it with you. For example, if we take a look at the 4 hours time frame, as we can see here on the chart above, market has violated the descending triangle pattern. The market was trading in between descending triangle pattern, falling down, taking a bullish trend, and then market fell down to test the support level once again. This becomes the double bottom level, and as soon as market violates the double bottom level, market tried to bounce off, but unfortunately, or maybe fortunately, the market manages to give us a closing below this particular double bottom level. So the closing of candles outside the descending triangle pattern is confirming that there is a breakout in the market, and now the odds of selling in the market remains pretty high. For example, market fell down, and after falling down, market retraced back up, and after that, as we can see here, if I zoom in, the market is forming candles below this particular level, which means that investors are respecting the support become resistance level, which is 1.3233, and closing of candles below this particular level is pretty much likely to drive us a selling trend in the market. Therefore, we should look for a sell trade. If you guys are looking to take a sell trade, you can go for selling below there. The stop loss needs to be very small, not very huge. You can set the stop loss of 25 pips, while the take profit can be pretty long, because the market is pretty much likely to target 1.3162, and it can offer us the movement of the take profit of something around 60 to 70 pips at least. That is what I am expecting right now from the Canadian dollar. Anyways, let's see. So this is about the Canadian dollar. Now if we move on and take a look at the US dollar, USD, the precious metal gold. Gold has not moved a lot. As we can see here, the market tried to break out this particular range, and also it has closed the candles outside this sideways range. We need to confirm that whether this is a breakout or not, because the 50 pairs exponential moving average here on the 4 hourly time frame is likely to keep the gold prices on a bearish mode. So as we can see here, the market has formed a doji candle, and after that there's another doji candle, which is now market is forming sort of a bearish candle. We have to see if this is a bearish engulfing, which is followed by a doji candle. There can be a bearish reversal in the market. Second thing that we have to keep an eye on is that the market has already completed 50% Fibonacci retracement. This can provide, or this can extend, a very solid resistance to the precious metal gold. Alongside, if we also see that this is the same level which extended support to the precious metal gold. It was working as a resistance in the past, and then it started working as a support. Now market violated this support level, and this support level is now likely to work as a resistance level for the precious metal gold. So the sideways range is violated, and it's not going to work anymore, but for now we have to keep an eye on the 50 pairs exponential moving average, or you can say that we have to keep an eye on 1967 level, because below this we can expect a continuation of a selling trend, while the bullish breakout of market is like the closing of candles above this particular level, which is 50% retracement, like the candle something like this, and the crossing over 61.8% Fibonacci retracement level is pretty much likely to drive further movement in the further bullish movement in the precious metal gold. While the initial target for on the higher side is likely to be found around 2010, and then the second resistance level is likely to be found around 2050 level. So guys, if we take a look at the leading indicators, especially the MACD, is suggesting a bullish bias, while the RSI is suggesting a bearish bias. At the same time, the 50 pairs exponential moving average is also suggesting a selling bias in the market. Therefore, we should keep an eye on 1967 level to stay bearish below this particular level or to stay bullish above this particular level. Let's wait for the market to give us a closing above or below this particular trading level. Guys, later today we do have some high impacted economic events. For example, the retail sales from the US economy is likely to be there, and this may have an impact on the gold prices. So let's keep an eye on it during the US session. Guys, that's pretty much it for now. But if you guys have any questions or if you guys have any concerns, you can write me down in the comment box below. And also, if you like my content, if you like my analysis, do click on the like button and also share it with your friends. Do not forget to subscribe this particular channel, because we on the daily basis we are sharing the latest trade setups, and I'm sure that this is going to be very helpful for you guys. So guys, that's all for now. And since it's the weekend, I wish you a very good weekend and have a very profitable session ahead. I see you again with another forecast video on Monday. Until then, take care of yourself and bye everyone.